Welcome to our tutorial on understanding expenses in Xreference. In this tutorial, we'll explore the various ways a business can record where the funds are allocated within the platform, empowering you to maximize efficiency and accuracy in managing your financial records. We'll be covering different types of expenses, including regular expenses, purchase orders, superannuation funds, and commissions payable. Let's start with regular expenses. Regular expenses are generally operational costs to the business. Examples include fuel for transportation, stationery for office work, and bank fees incurred in financial transactions. To record such expenses, navigate in the menu to Contacts and select Suppliers. At the top of the screen, click on the Supplier Transactions button where existing expenses are listed. To create a new expense, click on the Add New Expense button and select the supplier from the list. Select the appropriate expense account and enter the cost and a description for the item. Then click Add Item to add it to the Expense Items table. As the items on the expense are added, a total will appear on the right side of the screen. If there is a receipt for the expense, an image or PDF can be attached to the transaction, and also payment can be recorded either now or later, depending on when the expense was paid for. The note field and description field serve different purposes. In the note, it may be helpful to record that a cash purchase was made at BP, for instance, as making a supplier for each cash purchase may be an unnecessary burden, and in the item description, if it was fuel, it may be helpful to include which vehicle it was for. This way, the questions when, where, why, how, and what for are all answered appropriately from this supplier transaction entry and offer great documentation, including proof of receipt if needed. Once the required amount of information is entered, click Save, and the transaction is recorded. Repeat this process in the Supplier Transactions screen until the expenses from various suppliers are entered. Sometimes it can be helpful to make a generic supplier like hardware stores and use the note field to record each store name rather than make many suppliers which have no real purpose. Be aware that you may also log into Xreference on your phone to record expenses in real time, and even use the phone camera to attach a receipt if you like. Expense payments to suppliers can be done individually on the fly, or can accumulate for a supplier and be bulk paid with one larger payment in the Finance Creditors screen. These elements will be discussed in more detail in upcoming finance tutorials, but for now let's move on to purchase orders. Purchase orders play a crucial role in inventory management by facilitating the procurement of stock items. They provide a structured way to order goods from suppliers, ensuring that the right quantity of stock is available to meet customer demand. Timely creation and processing of purchase orders ensure that stock items are replenished promptly. This helps prevent stockouts and ensures that products are available for sale when needed, enhancing customer satisfaction and loyalty. Purchase orders strengthen relationships with suppliers by providing clear documentation of orders and expectations. They specify terms and conditions, pricing and delivery schedules, reducing the risk of misunderstandings or disputes. By using purchase orders, businesses can negotiate favorable pricing with suppliers and track costs more effectively. This helps control expenses related to purchasing stock items and ensures that procurement activities align with budgetary constraints. To create a purchase order, navigate to Items in the menu, then select Purchase Orders to see the list of existing purchase orders. Click New Purchase Order to create a new one. Select the supplier and then use the Add New Item button on the left of the screen to select items for the order. If cost prices have been entered in the Edit Item screen, then this will create an expected cost for the order, which is shown on the right side of the screen. Once the selections have been made, click Save to record the purchase order. When the items arrive, the same purchase order can be opened using the Edit button in the Action column, and within the Purchase Order screen, the Supplier Invoices button should be clicked. A purchase order may be received in one go or in multiple receptions, and each one may have its own invoice, so click New Order Delivery for each time a reception of order items occurs. In the reception screen, adjust the quantity received and pricing to match the invoice from the supplier, including the vendor part number if it is not there, and then click Update Item. This will add the received items to the invoice and at the same time update costing for the original item entry, facilitating more accurate cost estimations on future orders. Once the total matches the invoice from the supplier, it is a good indicator that the received items have been accurately accounted for. An image or PDF of the supplier invoice can be attached here for future reference. Click Save to record this supplier invoice. Once again, supplier invoices from purchase orders can be paid individually or with a larger bulk payment in finance creditors. This overview covers the basics about purchase orders, but the dedicated stock control tutorial will delve deeper into stock locations, stock transfers, stock takes and item costing, which are closely related topics. Moving on to superannuation funds. This type of expense happens automatically when a payroll is created, as it generates a transaction for the supplier when the payroll is saved. In cross-reference, each superannuation fund is a supplier, and the superannuation portion of the payroll is added as a liability to the supplier. This will be explained more thoroughly in the payroll tutorial, but it is still an expense to the business which is recorded like any other. Why are we focusing on such a small part of payroll? Because this part is dealt with using suppliers in cross-reference. Naturally, the entire payroll is an expense, as are taxes, but we will be dealing with these in financial tutorials, and for now we are focused specifically on supplier-based expenses. The next type of expense is commissions payable. In cross-reference, the sales screen and job screens can simultaneously create a transaction for a customer sale and a transaction for a referral supplier commission transaction if one applies. Suppliers that are referrals may be paid a percentage-based or fixed commission for items sold in customer invoices. The commission is automatically generated and added to the supplier account as a liability when a sale or job is updated. Finally, there is one more expense type that can be generated, and this comes from labor costs on a job when a service personnel is used in a call-out. If the service personnel is an employee, the business will incur costs through payroll. However, if the service personnel is a supplier, then the contractor will be sending an invoice, and this will be dealt with in the jobs tutorial. By employing various recording methods across different sections of cross-reference, we ensure meticulous management of expenses while offering tailored user permissions for each activity. This strategic approach allows for precision in optimizing each screen's functionality to its intended purpose. Thank you for joining us today. Remember, we're here to help you make the most of our platform. If you have any questions, don't hesitate to reach out to us using the About screen in cross-reference.